Well, good morning, everybody, and thanks very much for that introduction and for plugging my book. This is what it looks like if you buy the physical copy. I want to talk to you today about what I'm calling the new normal for the world economy. And some people, when I use that phrase, say, well, how can you talk about things being normal? Surely we've had a big crisis. We haven't gone back to where we were before. That's not normal. And that's the reason I use the phrase new normal, because I think the phase that we're in is not just the aftermath of the crisis, not just the aftermath of recession. It's quite a prolonged phase of different economic conditions that businesses need to adjust to. Now, one of the perils of being an economist is that things are always changing in the world economy. And when I was talking to people at that very wonderful party we had last night, they were saying, well, what's happening in Ukraine and Russia, doesn't that change what you're going to say tomorrow morning? And I was reminded of a phrase, a quote from former British Prime Minister Harold Macmillan, who was asked, what was the most important thing that he had to do, that changed his view and he had to deal with when he was the Prime Minister of the UK. And he said, events, dear boy, events. There's always going to be events in the world economy. But what I want to do today is focus on the big picture, what I call the big tides that are affecting the global economy. And they're significant not just for the economies of the West, but also for the economies of the Asia-Pacific region, of Africa, South America and other emerging regions. Let me start off by taking a sort of global satellite view of the world economy in economic terms. And if you read the financial press here in the West, in the UK we have the Financial Times, in Europe, in the United States, Wall Street Journal, other national financial newspapers, the picture that you get is the world economy is in terrible trouble, it's struggling, it's all very difficult. Well, if you look at these figures, I think it's hard to square that view with what these figures are showing. I've found in my career as an economist, it always helps to check people's views against what the data is showing. Now, around the turn of this century, the GDP produced by the global economy in dollar terms was $32 trillion. By the time of the financial crisis, 2008, that had nearly doubled to $61 trillion. And then we had a short dip, but where we are expected to be here now in 2014 is about 25% up, more than 25% up on that position where we were in the financial crisis in terms of the amount of dollar spend across the world economy. And according to the IMF, by the time we get to 2018, the dollar value of the world economy will be 3 times what it was at the start of the century. So in a space of less than 2 decades, we've got a tripling of the dollar value of the world economy. Now that doesn't look to me like a world economy that's struggling or in deflation or is contracting. That is a world economy that is continuing to grow. But what has been happening is that growth, particularly recently in the 21st century, has been unevenly spread. And that is quite strikingly perhaps different from where we were, particularly in the 1980s. In the 1980s, we saw what are called advanced economies and emerging and developing economies growing at around about the same pace. A little gap opened up in favour of the emerging and developing economies in the 1990s. The performance of emerging and developing economies in the 1990s was depressed a bit by the Asian financial crisis at the end of the 1990s. But the situation in terms of growth has been quite marked, the disparity in the 2000s, and indeed has continued over this economic recovery. And when people talk about this, they often refer to this idea of the BRICS, which was a phrase coined by Jim O'Neill, who used to work at Goldman Sachs back in the 1990s, and got him a lot of speaking engagements. He's probably still getting him a lot of speaking engagements. And in fact, he's got a book in the same series as mine, funnily enough, where he updates his theories and gives his current view. But I think this idea of the BRICS is really quite a misleading sort of approach to what's going on here. Brazil, Russia, India, China, what have these economies got in common? Brazil has been it's a middle-income economy that has been quite volatile for some time, has good phases of growth, and then has periods of economic difficulty. Russia, we can see what's happening in Russia at the moment, is a big commodity and energy producer, has not necessarily the same economic fundamentals as India and China. The way I prefer to think about this issue is that what we're seeing is the emergence of the Asia-Pacific region, and that includes the big economies of India and China, as the dominant region in the world economy. And that's not just something that we're looking forward to in the future. That's something I think that's really happening now. If you look at the Asia-Pacific economies as a group, they account for about a third of world GDP, whereas the United States or the European Union account for about between 22-23% each. And that's a shift that's been taking place progressively, the growing importance of the Asia-Pacific region. And if you want to look at this in big historical terms, the big picture is that the 19th century was a century where Europe was ascendant in the world economy. And in fact, Europe went out and colonized much of the rest of the world on the back of that. The 20th century was the American century, when the United States was dominant in the world economy. And the 21st century, in some form, is going to be the Asia-Pacific century, or some people say the Chinese century, where the Asia-Pacific region is becoming the dominant region in the world economy. So though we are seeing the impacts of the financial crisis, and that's quite an important thing, a very big challenge for the West is also how to come to terms with this major phenomenon, which is not just a short-term issue, it's a long-term development which is affecting the balance of the world economy. And people look at China and India and say, oh, these economies, they're going to get into difficulties and they'll have a financial crisis and this will all sort of unravel. I think if you look at this chart, first of all, it shows that this trend that I'm talking about has been going on now for about 35 years already. But the other point I would make is that the weight of population is really on the side of the Asia-Pacific region. 60% of the world's population lives in this region of the world economy. And unless there's a really big accident that causes economies to go seriously off the rails, as these economies continue to develop and living standards rise towards the world's average, there's a degree of inevitability of the share of GDP coming from the Asia-Pacific rising towards 50% or so, which is the projection of many organizations for the middle of this century. So, yes, we're dealing with the aftermath of the financial crisis. I wouldn't want to underplay that. But we're also dealing with this big geo-economic shift. Now, if we turn back to the Western economies, there are quite different trends emerging also there too. And some of the Western economies appear to be better adapted to this more globally competitive world and some of the shocks after the financial crisis than others. And this is a slide that I like to use to illustrate this. And I do it partly because I come from the UK, I'm British, and if you live in the UK, you're subjected and barraged by a continual stream of how badly are we doing in the UK economy compared with other economies. Well, if you look at my chart here, it actually shows the UK is the second best, just by a short head, of the G7 economies on this measure, which is of GDP per head, which it takes population growth out of the equation. So how well are economies doing over the 21st century since 2000 in terms of GDP per head. And the UK, some of the lines look rather similar because I have to follow the PwC colour pattern here. But the second line, second highest line, the one that goes up above the axis quite a lot and then doesn't do so well recently, is the UK, second to Germany. And then there's a group of economies in the middle. Surprisingly, once you take out population growth, the progress of Japan, US, Canada, not that dissimilar since over the 21st century. And then you've got a couple of laggards, and one particular laggard, which is Italy. That's the bottom line, where living standards, GDP per head, are 7% down on 2000, not just on the peak of the cycle, but on the start of this century, which I think is quite a worrying situation. And then France is also slightly lagging. And this disparity between how different parts of the Western world are doing comes out, I think, really quite clearly in this slide about unemployment. So if you split Europe, the European Union, into North and Eastern Europe, and I put UK into the North and Eastern Europe, or the north of Europe more particularly, you've got about, that accounts for about 60% of the European Union, and then Southern Europe and France accounts for about getting on for 40%. Up before the financial crisis, there was a pretty similar rate of unemployment in those two blocks. Since the financial crisis, actually, in Northern and Eastern Europe has not done too badly. Okay, we'd like to see unemployment lower, but unemployment's currently about the same as in the United States. It didn't go up as high on average as the United States. But the economies are really struggling are in Southern Europe, and also France is showing some tendency to follow those trends, particularly having a relatively high level of unemployment. So, just to sum up the sort of broad picture that I'm describing, we're describing an economy, world economy that's been hit by the financial crisis, but is in aggregate actually bounced back and is growing not too badly. We're seeing quite different growth trends. At the heart of that is the emergence of the Asia-Pacific region and the big Asian economies, which have big populations like China, India, Indonesia, etc. We're seeing in the Western world disparities between economic trends. Some economies, and I would highlight United States and Northern European economies and parts of Eastern Europe, are better adapted to live in this new world and to do well in it than some others. So that brings me on to my idea of the new normal, this new normal economic growth period that we're in. What is it? And essentially, in my view, 2007-8 marked a watershed, not just as an economic cycle, the end of a long and sustained expansion in the UK, which I focus on a lot, and other Western economies. And the issue that we face is the conditions which supported that period of growth are not set to return. I put quickly, they're not set to return perhaps at all in some ways. And this is a sort of pattern that we have been through before. In the 50s and 60s, the Western economies had a long period of growth, and that was disrupted in the 70s, and growth only really got going again properly in the 1980s. And that growth phase in the 1980s had some very common features that continued through until the mid-2000s. We've come to an end of that long growth phase, and now we're going through a period of turbulence that has more affinity, I think, with the period in the 1970s and early 80s than the 1930s, which some people refer back to when they're talking about the financial crisis. And in my book, which I will plug mercilessly through this presentation, I set that out in a bit more detail, but I'll give you a bit of a flavour of that as I go through. What was happening in the 70s and 80s? Yes, there was financial turbulence, there was high inflation. There was a process of structural adjustment going on in response to the way the world economy was changing at that time, increasing price of energy in particular. And we're seeing a similar process of structural adjustment at the moment. And understanding these structural adjustments, I think, is key to everybody in business, whether you're in the hotel industry, whether you're in the aerospace industry, whether you're in other services industries, business services like PwC, who I work with at the moment. So I see quite significant parallels with disappointing growth we're seeing now and volatility in the Western economies and in the 70s and the early 80s and what we're seeing now. And I just use this chart to illustrate this, a sort of Twin Peaks chart, which focuses on the UK. This analysis works particularly well for the UK, but it also has correspondence with many European economies and with the United States. So you had this long growth phase that dominated the 50s and 60s, a period of turbulence starting in the early 70s, which had the common features that I see are threefold. One is financial volatility, which we saw when the exchange rate system that was put in place after the Second World War was undermined. We had big energy price shocks, and we had a big loss of confidence in the ability of governments to control economies. We've got all those three features back again now. We've got financial volatility, we've got big energy price shocks, a relatively high level of energy and commodity prices, and we've got a loss of confidence in the ability to get economies back on track. So average growth is very low, particularly if we compare with the peak of the cycle, as we do on this chart, though it is beginning to recover in some economies, and I'll come on to that in a minute. But just to highlight the point that I'm making, that the growth drivers that we saw before the financial crisis, which had their roots, in my view, in the 1980s, but the conditions which started in the 1980s after a brief interruption of the early 90s recession, returned in the West in the 1990s and continued to the mid-2000s. Three big conditions, which are easy to remember. Easy money, a deregulated financial system, providing consumers and businesses with access to easy finance, relatively speaking. Cheap imports, a world in which the oil price came down in the mid-80s, and then that was reinforced by what people call the China effect, which as manufacturing production moved and other activities moved to low-cost economies, it became a lot cheaper to buy Western consumer goods like clothes, electronic goods and so on. And a confidence that was very noticeable, particularly in the mid-2000s, that if economies got into trouble, central banks and governments could put them back on track. When I joined the Monetary Policy Committee of the Bank of England in 2006, that was the prevailing view. Yes, we might get some shocks to the economy, but we can change interest rates, we can change government spending and tax policies to get economies back on track. We now know that that's not the case, particularly in some of these southern European economies. Very big fundamental changes have to take place, but across every Western economy, there has had to be some degree of adjustment of a more fundamental nature in terms of government finances, in terms of the structure of the economy, and part of what's going on is that process of adjustment. This slide just illustrates, again using the data from the UK, how this world of cheap imports has changed. If you went back in the UK economy to the early 2000s, the prices of goods in our consumer basket were actually falling, and on average they were pretty either low and stable or falling, up until the mid-2000s. What changed to create this pattern which you see of volatile inflationary shocks which we've seen recently? In the UK's case, it's a bit to do with our exchange rate, but more fundamentally globally, this China effect that people talked about, where things were getting cheaper year on year, clothes, electronic goods, has been replaced by a sort of reverse China effect, where the strength of growth in the Asia-Pacific economies and other parts of the emerging world is pushing up the cost of energy and commodities and food that we consume. And while those parts of the world continue to grow relatively strongly, I think we're going to continue to see this world of relatively high energy and commodity prices and continued bouts of volatility. So we've seen a bit of a subsiding of some of these energy and commodity price pressures. I'm not sure that's going to last if, as most forecasts suggest, the world economy picks up, or if, for example, this problem in Russia and Ukraine develops into something more serious, because Russia is quite a major producer of energy and commodities. And just coming back to my point about the BRICS and why I don't think that's a very good way of summarizing what's going on across the world economy. I said that at the heart of this growth in developing and emerging economies was the emergence of the Asia-Pacific region as the dominant region for the world economy. But other economies are riding on the back of that to some extent. And the fact that energy and commodity prices are high is helping economies that produce those resources of energy and produce those commodities to benefit. And that's a big part of the story about why Africa is doing relatively well at the moment, and why the Russian economy has been doing a bit better than it has in the past. Now, there's a question about how long that will go on, but those economies are benefiting from a different aspect of growth than the sort of Asia-Pacific region, which is more growth driven by people. Other parts of the world are relying on this growth driven by energy and commodities. That is potentially more volatile. So this new normal that I'm talking about, I think is set to persist for a while. Through the mid-2010s, with continued bouts of financial volatility, with the pressure of dealing with the problems of the financial crisis, exacerbated by this big geo-economic shift. Now, some economists have talked about this as if this is the end of Western growth. And one economist in particular, Stephen King, who's chief economist for HSBC, he's also written a book called When the Money Runs Out, The End of Western Affluence. You don't actually have to read the book to get the message there. It's basically a pretty apocalyptic view of saying, well, the West is doomed and it's going to be sort of gradually overtaken by the rest of the world. I am more optimistic about the Western economies, and one of the reasons I'm more optimistic is that we have seen Western economies recover before after a period of turbulence in the 1980s, or in some cases it took a bit longer, perhaps in the 1990s. So there is the capacity in mature Western economies to adapt to changing global economic trends if we pursue the right policies. But that will take time. It will take time for the structure of the economy to adjust. And there are three big areas of adjustment. One in the financial sector, which a lot of people are talking about. Two, into the way in which government finances are organized, so government spending and taxation can be on a sustainable level. And three, within business, so business restructures and reorders itself to find new sources of growth. And if you want an example of where that happened in business, in the period that I talked about before, after the turbulence of the 70s, think of the information and communications revolution. In the late 70s, in the middle of that turbulent period where we had high inflation and a lot of other economic problems, Bill Gates and the founders of Microsoft and the founders of Apple and other high-tech companies founded their companies in the late 70s. And those developments then provided the foundation of information and technology development through the 80s and 90s, and we now have the internet. It basically has taken over our lives. If you sat there in the 1970s and early 80s and looked at the very primitive early computers that we had around there, in the UK we had something called the Spectrum ZX, which is something you plugged into your television and you played very simple computer games on, perhaps do a bit of programming, and then looked forward and said, how is this going to develop? I don't think many people would have envisaged the internet as we currently see it. So within business, if we let the forces of innovation, of restructuring, if we let business do its thing and find new sources of growth, new ideas, business can create new sources of wealth. But in my view, that is a very important conditional statement. Countries that stifle business and don't create that climate for new innovation, investment, new sources of business to develop, are going to find it much more difficult. I think it's a very important part of the Western story. So I think as that process unfolds, we will see a new growth phase. It won't be exactly like the one we left behind. That's never the way things happen. History always moves things forward. But I am optimistic that in the better adapted Western economies, new sources of growth will emerge in the second half of this decade. And perhaps the improvement that we're seeing in some economies like the UK and the United States at the moment are beginnings of the starts of the beginning of that process. Now, in terms of what this means for business, policymakers, and investors, you need strategies to manage through this rather more subdued growth phase, but you also need to be able to take advantage of opportunities that may be emerging and may shape the next growth phase. And I think that is a very important message for where business will find success in the new normal economy. I don't believe that a strategy of hunkering down and just weathering the storms and saying, well, we'll wait until things get back to where they were before, is the right strategy for business, whether it's the hotel industry, whether it's the aviation industry, whether it's the motor car industry. Business needs to adapt and find new sources of growth in the current environment. Businesses that don't will probably find they're lagging behind the curve when economic conditions improve. So this is a time of opportunity, even though it looks a more difficult time. And here are some of the areas where I see businesses can find success in the new normal economy. Repositioning to tap into what's going in Asia and emerging markets, though recognizing that some markets are riskier than others. Particularly the use of new technology, innovating and exploiting new technology. Identifying opportunities that are coming about from the restructuring of economies. I've talked about restructuring in the financial sector and the public sector, as well as in business. All those processes of restructuring throw up new opportunities. Customer requirements are changing. In a more difficult economic climate, people are looking for low-cost models in various areas. How do businesses respond to that? The social network world, the internet and everything is shaping the way in which we do our business. How can businesses respond to that? In this more challenging economic environment, being flexible and adaptable as a business, it becomes more important. Before the financial crisis, the rising tide was floating all ships. And maybe some businesses were doing better than others, but the need to have a flexible and adaptable business model was not so crucial then. Now it's very important. And being efficient in the use of energy and resources is also a critical factor in this world, which I think is going to persist for some time, even though there will be some volatility of relatively high energy and relatively high commodity and food prices. Now let me move on to say something about the short-term outlook, because I've described, I think, there the way I see the big picture, a world that is increasingly influenced by what's going on in the Asia-Pacific region, where other parts of the emerging markets are benefiting from relatively high energy and commodity prices, where the West consists of economies that have seemed to be better adapted to this new world than others, and there are particular problems in southern Europe and maybe France also affected by that. And that sort of comes out in this picture of the global outlook for 2014. You can see that actually, unlike for most of the period up until now in the recovery, which has been going on since the middle of 2009, some of the Western economies are expecting reasonable rates of growth, not super strong growth. If I went back to 1984, the US economy bounced out of the early 80s recession at a growth of over 7% in 1984. Well, in this world that I'm talking about, 3% growth is pretty good. In the UK, we're expecting around about 2.5% growth. That's pretty good. Economies in southern Europe and France are expecting weaker growth. Germany and Japan, which have much weaker population growth, are expecting around about 1.5%, which is not too bad by their standards. And then also across the emerging markets, we're seeing a bit more of a variable picture. China and India still doing relatively strongly. but some of the other economies slowing down to rates of growth that are more comparable with the West. But the general picture is improving, because if I'd put this slide up for any of the previous 3 years, there would have been negatives. There are no negatives, even though this country group includes economies like Greece, Italy, and Spain. Admittedly, growth rates are pretty slow there, but they're turning around. Europe is improving after having gone through the problems of the euro crisis. It doesn't mean the euro crisis is over, but it does mean that perhaps we're past the worst of it, and that we can look forward to a return to modest growth even in southern Europe. And that's reflected in the changing pattern of European growth. But it's interesting to contrast where we're moving into now in terms of the relative positions of the UK and Ireland, the offshore European economies, and the Germany, North and Eastern Europe compared with France and Southern Europe. And here I've divided continental Europe with what I call the new Maginot Line, which is phraseology, as you'll recognise, borrowed from the First World War. And the prospects, I think, to the south and west of that are not as good as prospects to the north and east of that. Having said that, we do see growth returning in France and southern Europe, but at a slower rate. And the UK and Ireland, to some extent, are doing relatively well. But compare that with the position that existed up until about 2006-07. And it was the fact there that actually France and southern Europe doing better than Germany and northern and eastern Europe. And the shift in the relative position of that yellow line, that red line, didn't occur actually at the depths of the financial crisis. It started to emerge before that. And I think this is partly a reflection of the fact that the difficulties in the southern part of Europe are to dealing in this new world that I've described. In emerging markets, we are expecting slower growth than we were a few years ago, and this just shows how the IMF's forecasts have changed. But I think the story in emerging markets is that some parts are still expected to show relatively strong growth, particularly the large Asian economies. Africa is still benefiting relatively from the energy and resource demand that I've talked about. There's been more of a slowdown in the former Soviet Union economies, Latin America, Central and Eastern Europe. But even in these areas, growth is expected to remain relatively strong compared to the West, according to the IMF's forecast for the next few years. So the story in emerging markets is not that emerging market growth is going to cease to be strong and important. We're getting more discrimination between different types of economies. We're also seeing cycles emerge. Growth doesn't happen anywhere in any economy without a cycle of some form. And so periods of strong growth will be followed by periods of weak growth. The economic cycle is so old that it's described in the first book of the Bible, Genesis. When Joseph interpreted Pharaoh's dream, he said there would be 7 good years followed by 7 bad years. That's the first economic cycle that I can find recorded. And it's also the first economic forecast that I can see recorded, because it was a forecast that Joseph made that actually came true. Surprisingly good economic forecaster. Okay, just to sum up then, what are the implications for this new normal economy? I'm seeing a relatively slow emergence of Western economies from this difficult growth phase, so we shouldn't get carried away. Prospects are brightening in the what I call the better adapted economies, which I see as UK, US, and North and some of Eastern Europe. The Asia-Pacific region continues to lead emerging market growth, but prospects vary, reflecting cycles and fundamentals. Some economies are better placed than others. In a world where Western growth is returning, the very emergency low levels of interest rates that were put in place in the crisis should begin to change, and there's a debate already emerging in the UK and in the US about when interest rates will rise. Hopefully that process will be gradual, though my worry, having served on the Bank of England Monetary Policy Committee, is if central banks hold off from raising interest rates too long, they will then have to push them up more quickly and there will be a shock. I would expect the UK and the US to raise interest rates before the euro area. Relatively high energy and commodity prices with continued volatility. And I think the talk that we've heard a lot of over the last few years about deflation is really exaggerated. I think we'll continue to see more inflation than deflation, but driven by these global price shocks and perhaps exchange rate movements. Let me just say a few things about hotels, because PwC, who I work with now, have just released their latest hotel forecasts. And the new normal for hotels is revenue per available room in real terms in the European market, still quite significantly down once you adjust for inflation on where we were before the crisis, and more so than can be explained just by the pattern of GDP. So there are challenges in the hotel industry of adjusting to this new normal. But as I have said before, just to hunker down and take a defensive strategy is not necessarily the right thing. And finally, when we look at the city markets, there's quite a degree of variation. This chart, a standard 2x2 matrix, higher up the vertical axis is doing better during the recession. To the right is doing better since the recession. Cities that are to the top and right of this chart are better performers on average. You see the biggest cities attracting, doing better. And I'm not surprised about this. The bigger cities are more focused on the broader international market. So in a period when Europe has been struggling, being able to tap into that strong demand in the global marketplace has been important. There have been some cities of structural issues in the left-hand corner, but most European cities in some form of what I call incomplete recovery. So that does hold out the hope that as economic conditions improve, more of these cities will move up into the top right segment and will begin to look at better performers. But there will continue to be quite a bit of variation. So welcome to the new normal. It's a world where the Asia-Pacific region is driving growth. There are big challenges for the West, not just from the financial crisis. Western economies are adapting at different speeds, but there is hope that the Western economies will move into a better growth phase. It won't be like the last growth phase. Identifying the areas that will drive that growth is not easy, but looking at where the opportunities are in the current environment provides a clue to that. And it'll be perhaps some time before we see a return to a more prolonged, sustained growth phase. Thank you very much for listening. And if you want to read more about this, it's in the book, which is also available online. Thanks very much.
Should we get a few questions, actually, while we've got...
I think we've got 5 minutes
and here we've got about 5 minutes, but I know in the interest of time, too, keeping the program moving along. So, China ascendant, right? For the benefit of the audience here, there's been a long period, not just of, you mentioned the 21st century or the 20th century as a US dominated century, but in terms of currencies, you've seen certainly dollar dominance. As Asia and the Asian economies and China in particular grow in prominence, how do you see that playing out in terms of currency? And particularly the yuan or the renminbi?
Yeah, I think it's quite clear that the Chinese have a desire to see their currency now used more internationally. But as with all things in China, I think that's going to be a gradual process. I think one of the lessons that the Chinese sort of took from our financial crisis, that's probably the way they see it, is that trying to move very quickly in terms of liberalizing, opening up markets can contain risks. But they do seem to be moving gradually in the direction of trying to encourage the use of the yuan as an international currency, and London, the city in London, is very keen to be one of the big centres where that activity takes place within Europe.
So in terms of interest rates, I'm sure it's one of your favorite topics. for the investors here, what do you see as the short-term or mid-term sort of interest rate environment? That's quite an important calculus in terms of
I think we're at an interesting phase. I think that if I was sitting on the Monetary Policy Committee in the UK, I would be arguing now that we should be gradually raising interest rates. It's not a popular view because there's a lot of people out there who've borrowed money and they don't want to see interest rates go up, and they say, well, perhaps that can wait a bit longer. All the experience in central banking is if you allow the process of raising interest rates to be too delayed, you will then get a sharper hike. And we don't have to look back too far to see examples of that. For example, in the US, in 2004, 2006, rates went from 1% to 5.25% in the space of less than 18 months. I think in the current environment, that would be quite a big shock to the economy.
Right.
So what I believe we need to be moving towards is a gradual process of raising interest rates. And I think people in the business world should be preparing for that and making sure that their finances can withstand that to some degree. I think if that is delayed too long, I think the risk becomes that rise takes place more quickly, and that then it is a bigger shock to the business community.
Any questions from our audience this morning? Well, if not, I'll ask you one last question. You were also, I think, chair of the investment committee for British Airways pension
You're correct,
funds,
yeah.
right? So hotel investments, plus or minus?
Well, hotels, travel, as a general activity, I think we heard yesterday, is likely to increase. Ever since I watched my son, when he was 3 years old, get on his bike, it struck me there's an innate human desire to travel, and when economic conditions are improving, I think travel activity will pick up. Hotels are in the services industry. Services activities are likely to continue to increase their share of GDP in all economies around the world, including China. I think China now has more services than manufacturing. So I think there are many opportunities, but I think we will also see structural changes in the market. Some parts of the market will perhaps not do as well because consumer patterns are changing. So yes, it should be an area where you'll find good investment opportunities, but you need to look at the particular components of the business. I think I've given the classic two-handed economist
answer.
That's
right,
there.
exactly. Very nicely done.
But some quite good opportunities around, I'm sure.
Excellent. Well, thank you very much. Ladies and gentlemen, a round of applause for Dr. Andrew Sentance.
Very good.
Thank you. Thank you very much. Cheers.